I'm Jamie Yoder, and I'm joined by my colleagues Marie Carr and Anand Rao. As part of our Insurance 2020 and Beyond research, we've detailed the steep trends and how they manifest themselves in each of the insurance sectors. Importantly, I think one of the key disruptors is really centers around customer revolution. This is really about taking an outside-in view of what's happening versus the traditional sort of inside-out mindset that we often think about our operating models and product solutions. And specifically, it centers around significant changes in the behaviors, expectations, and demographics of our customers, and not just the end consumers, but also the intermediaries and the institutions that we serve.
That's very true. Yeah, if you look at demographics, actually, as you know, we have been looking at the demographics from the two extremes. On the one end, you have the baby boomers and what kinds of expectations they have in terms of what they need in terms of life insurance, annuity, retirement. We've also been looking at the other end, the millennials, and that's where some of the more interesting conversations are happening as to how their behaviors are fundamentally different to the baby boomers. They are the, if you like, they give me the 2-minute video. I don't want to sit one hour in front of an advisor, human advisor. And we're seeing that pattern again and again in a number of different things. So for example, car, and it's been the American dream to always have one car or maybe even two cars, but now we are noticing that amongst the younger generation, the millennials, the car driving is actually dropping. People don't want to own cars, they would rather share cars. So that's going to cause a fundamental shift, understanding when that customer wants to ride their own vehicle versus wants to share is going to cause changes to the insurance industry.
And I think that demographic discussion is really powerful because now when you look at millennials who want to interact differently, it ties back to the data, it ties back to the distribution and how kind of insurance companies relate to that. When you look at it, there's a dynamic of they want to interact differently, but then there's also the dynamic of how they're maturing because you see that they are saving more, they are a little bit more conservative. So later in life, they are starting to make those decisions, but they're using different information, they are demanding more in terms of the types of products and services that they have. So being able to overlay that with Generation X and boomers and tie all that together, this revolution is really putting kind of creating pressures, but also opportunities in a different way if we can relate to those customers as those demographic shifts occur.
The other point that you just brought out is around the transparency and trust. One of the things that we are noticing, obviously, is the millennials are much more eager to share that information, provided they get something back from the insurance providers, or for that matter, any provider. And that's sort of fundamentally different to the way information has been viewed, and even how people view the trust. So you still need to build the trust, but it's an environment where people are prepared to share the information as long as there is something in return for them. Yeah, so one of the things that's happening as we look at customers, as you said, customers have always had the expectation about having something really tailored to them and personalized. I think now companies can actually offer it to them. So the technology is there, the information is available, so they can offer these personalized services. Take any of the different lines, so start from auto. So you can now look at auto insurance essentially tailored for you. Based on how you drive, where you drive, and so on. And if you're going even further into driver assistance, so something that understands you and your driving behavior and even change for the better. So that's just in auto. We can see the same thing happening in life insurance. So the whole thing, I think, when you talk about customer revolution, it's also accompanied by companies being able to offer that personalization, I think.
And I think when you look at that, offering the personalization and really tie that to kind of the customer and what they want, you also have to kind of take into account, you've got this social media dynamic. So not only are they looking for that personalization that you were talking about, but the revolution, Jamie, you were talking about is that now, as I look at it, I can go out and see what my friends or people that I respect, how they feel about what it is that I have. Am I making the right move? Are they making similar moves? And that may or may not align with what the insurance company had intended when they created it, but they're starting to take it and make it their own.
Yeah, it's interesting. It's one of those phenomenons when you think about where we get advice, right? Social networks, well, these social networks are I mean, not too different than what we've always been accustomed to, and the technology just has really amplified your ability to look at it.
And to that point around the advice, we are really seeing the nature of advice change. I know back in the early 2010s, we can essentially said that some of these things are going to happen, and we are actually surprised that it has happened much faster than we think. Let me just give an example, robo-advisors. If I'd used that word 5 years back in an interview like this, you would have said, oh, are we talking about science fiction here? But now it's a very common name, and it's being used in Wall Street Journal at least half a dozen times in the past 6 months, and that's almost taken for granted now. And if you look at the amount of investment that has gone in there from the VCs, it's phenomenal. It's 500 million poured in just a couple of years now. And now you're seeing, this is the shift that Jamie was talking about, not just the end consumers wanting very specific tailored advice. Now, very quickly after a couple of years, you have started seeing advisors also adopt it. So now the platform is not necessarily straight to consumer, it is through the intermediary channels who have embraced it as well. And that has also resulted in some of the big names jumping into the fray, either acquiring companies or having partnerships with companies. So just in a span of 3 years, we have seen this whole notion of robo-advice really become an entity on its own with a huge impact. And we are talking about at least $2 trillion worth of assets being under robo-advised or robo-managed in the year 2020. And that's something that we couldn't have predicted.
Yeah, and it's in a fascinating space, because I think too often, especially when we first talk about it, every time you talked about sort of digital or digitalization or of advice, immediately people jump to the notion of, oh, well, it's direct or it's self-directed and all things happen. Well, this assisted advice, right, or in some cases embedded advice or a more holistic view of advice around how you're dealing with the offerings, it's that complements whether the other aspects of the channel, other roles of the advisor.
Well, and I think what you're talking about too kind of goes all the way back to the first point, which is the outside in. When you're starting with a customer, it really does begin to change your business model, because as you were saying, the distribution now wants to have better, more tailored advice so that they can make better recommendations. The customer wants it more tailored. Then how do you ensure that consistency? But then that also ties not just to the business model, but to the information that's now more available.
And it's that information, and to your point, about really sort of even raising the efficacy of your distribution partners and advisors is a huge part of it. And I think that, as a general design principle, can be a really powerful option.